Hello, traders. Welcome back to Market Skycast, the official Blue Sky podcast. Now, we had great feedback from the episode one, so we're going to make this a regular thing. We're going to do this every week. And, welcome back, coaches, Riz, Becky, Matt, and I'm your host, Justin. Let's just get right into it. Now, last week, we made some predictions. So about earnings, it was about some data. I kind of want to revisit that and see if you guys were surprised about anything. And I mentioned earnings first. So Matt, you were
Yeah.
big on the bank earnings and specifically Taiwan Semiconductors. Were you surprised, blown away, or did the reaction surprise you at all about any of this data coming out?
You know, I, the first week of earnings season, you don't get a lot of earnings data, but you get a couple very important earnings, and that comes out of the big money center banks, JPMorgan, Goldman Sachs, Bank of America, all of that. Finance was very mixed early on. Sells due to JPMorgan. Later in the week, Goldman Sachs, Morgan Stanley crushed it, and basically kind of offset one another on the financial side of the equation. But the only thing you ask the banks to do in earnings season is just to not be terrible. Don't dirty up the joint going into the heart of earnings season. And I certainly think they did good enough to not be a conversation moving forward. And that's the only thing you really want with the finance. But Taiwan Semiconductor was that catalyst stock for me last week. And I felt they were the most important data point coming into the market this week. They're a catalyst stock in the AI trade. They're the number two, number three most important company on the semiconductor AI side of the equation. And they killed it, Justin. Absolutely utter destruction of all things
Now, Matt,
expectation.
one second, real quick. I remember
Yeah.
specifically you mentioned that I think it was you need to beat by 7.2% or something like that to
You
actually
can't just
beat.
beat. You
Did, did
can't
they
just
did
beat.
they did they did they break that
Tell
threshold?
JP Morgan that. They came in at 5.6% and they got smoked to the downside.
Oh, so you
Taiwan
weren't
came in.
kidding. Yeah, I love
Yeah,
that.
Taiwan came in at 11% and it's off to the
Wow.
races here. So
Yep.
11% beat on the EPS was really, really good. But that's not the rock star status of the report. The rock star status of the report is what they said for the future.
Mhm.
Remember, trading, like when you're thinking about kind of the investor side of the equation, it's not about what you did in the past. It's about what you're going to do for me in the future. And in the future, Taiwan Semiconductor said, well, we're going to increase our forward looking guidance by 30% on the revenue side of the
Wow.
equation. That is a massive increase in guidance. You can't scoff at it. I call it the hat trick. When you beat on EPS, you beat on revenue, better than the market expectation. You beat on EPS, you beat on revenue, you increase forward looking guidance. That's the hat trick. Taiwan pulled it off. Great report.
Yeah, that's crazy dumb. But you weren't kidding about the 7%. JP Morgan beat by five, not good enough. Not at all. And
Seven,
for you
seven
guys watching,
percent's the
that's
number.
what for you guys watching, he's talking about more forward guidance when you get on the investor call after the earnings come out. So it's really important to pay attention to that. So Becky, last week you were talking about CPI. Were you surprised by it? Any thoughts on it? And did you trade it?
Yeah, actually, I'm so glad you asked me because what I was thinking actually is how it played out. So when CPI hit, it was very bullish in that moment. And then I observed it. I did my normal pre-market routine. And then when New York session opened, I actually traded just per my normal system and I shorted and I was very successful that day. And so that's just to goes to show that sometimes the fundamental data does not mean that the trend has begun with the initial push for the entire day or session. So I definitely was glad to have a system around that and to know to not chase those initial pushes from the data because sometimes they're fake outs. And that's actually what happened this week. So I'm glad that don't always just chase those metrics right when they hit.
Nice. Did you follow your rules and wait for the volatility to settle?
I sure did. Yeah.
That's great. I love
Learned
when you
that lesson
follow
the
the
hard way,
system.
man.
Were you
Uh,
surprised by the data at all, or it came in pretty flat? So
Yeah, nah. Didn't
yeah,
surprise
and
me.
it's funny because a lot of times these news events are just a run to liquidity just to make the opposite move. So I love
Yep.
that you let it sit, you used your own strategy, and you made it work. So that's great. Now, Coach Riz, you talked about earnings swinging options into last week. My question is, first, did you swing any plays into the week like you talked about?
I didn't really get the opportunity to on Friday. The move was just so good that it was one of those that I just couldn't leave any money on the table. So I didn't end up swinging anything. I ended up scalping throughout the day, throughout the week. So we had some killer trades today. We nailed almost 1,400% trade here in the
Crazy.
afternoon session. So, You know me, I'm always out there. I'm swinging that bat, trying to hit those home runs, base hits all the way, but still going for those home runs whenever we can.
Yeah, your end of day. I'm not even call them lottos because they hit all the time. But your end of day options plays, man, they are insane. And you know what? A lot of these power hours, we have all the coaches in the rooms. We have a couple new coaches. The rooms are packed, and it's just free money almost. Now, so you didn't get your chance to swing into it. You took your money because it was too good. Were you surprised by any earnings or any economic data last week?
I was really surprised by the banking sector. I had mentioned that going into this week, that was a real point that I was really looking at. And again, the numbers that came out from the Fed still didn't give us any real movement on it because it's more of the same of what is already expected and has already been factored into the price. So really, what we're leaning on is those other factors, which is the earnings reports. Unfortunately, the banks didn't do as well. Well, the earnings were good, but buyers weren't buying it. They were more interested in selling and taking profit and moving the market in a different direction. Obviously, the downturn in the market is really, I think, what caught a lot of investors surprised. Even the options chain throughout the week has been tilted towards the long side, but bears have been in control.
Yeah, and it's that goes back to you beat, but did you beat by enough? So, and enough is
Well,
never enough. You have to beat
yeah.
astronomically to keep going. So that's great. So let's go ahead and move into our first segment, Market Skycast. We are going to be looking at economic data, earnings, or political events. Now, what every trader is burning to know, we have some earnings, we have some data, we have some things that are up in the air that the government isn't telling us. They've been kicking it down the road. Now, I want to know from you coaches, what are you looking at this week? What is going to make you base your trades around it, or what is going to make you not trade? So Coach Riz, what are you looking at going into the week?
Well, going into next week, we've got some really exciting news. We've got the holidays starting off on Monday. So we've got MLK Day on Monday. Then we're coming into that Tuesday is we've got a whole bunch of earnings coming in, as well as Coach Mike. Mike is going to be hosting the morning session again. So you don't want to miss that. If you miss his technical analysis, he's coming back stronger than ever. But going back to earnings, I'll be taking a look at 3M. We've got some Bancorp. So we got a little bit of banking going on. Let's see. I'll really be looking at that. We've got a little bit of housing and Netflix as well. Netflix is in the afternoon. So that's going to be a really interesting one, as well as Silvergate, Silvergate Capital. So, there's some interesting things there. You got precious metals, you got banking, you got a little bit of mixture there. So I'm really going to be keeping my eye out to see what those earnings bring for us. If they have the catalyst and the real fuel to move the market up to some of these higher highs.
Most of the traders I see trade NQ. I'm going to assume Netflix is probably the one that's going to be moving the market the most for our traders.
I agree with that. I probably would see some movement in the market, people trying to get ahead of the trade, maybe Monday, trying to take advantage of some cost savings. If we get some lows, if you really want to take advantage of the Netflix move, you probably want to be taking an entry in the lows right now where we're at, since we have been selling this week. So it might offer you a decent chance at a swing for a longer hold on the position.
Oh, very nice. Yeah, Netflix is the big one in my mind. But yeah, great insight. Now, let's move on to you, Coach Becky. What are you looking for this week? Anything specific?
Yeah, it's a short week because of MLK Day. And so I'm very curious to find out if there's any news going to break about the Supreme Court hasn't given any real clear data yet on the tariff information. And I noticed on Forex calendar that Trump is scheduled to speak at the World Economic Forum on Wednesday morning. So I'm just wondering if there will be any pushback there, any volatility stemming from that opportunity where he has the mic and all eyes on him, with that still pending. So I'm pretty curious about that information and potential volatility pre-market on Wednesday. So we'll see. Otherwise, the other Forex data this week is not as standout-ish to me this week. A little more curious about what we'll talk about next week, though.
Yeah, I mean, my eyes are all on the political climate. We got Venezuela, Greenland, tariffs. There's just so many things that can just throw your whole day off if something comes out, some tweet, some news, and they keep kicking the can down the road. So I feel like the market is just waiting and waiting and waiting for something to finally come out. So I'm kind of with you on just watching the political climate at the moment.
I know there's so much up in the air, and he has the world global, microphone at that point. So I feel like that could be a little bit of a opportunity.
Yeah, absolutely. I'm kind of glad it's at 5:30 in the morning because, or is that 5:30 Pacific?
AM
It's
Pacific, yes,
Pacific,
for me. So it's an hour pre-market for New
hour
York session.
pre-market.
Okay,
Yeah.
so it is before. I'm glad it's not in the middle of the day because that'll throw a wrench in
Yeah,
everybody's
it's
plans.
the coast. We're on liberal time over here. We're a little bit different.
All right, and last but not least, Coach Matt,
Yeah.
what are you looking for the most going into the week?
I certainly agree with Justin, you and Becky on the political climate. Obviously, that's sensitive right now with the geopolitical situation. Go look at crude oil the last three trading sessions to understand how that political environment can impact the volatility. You've also had the president talk about these random policies economically that certainly can have an impact. And we all know about the 3 a.m. tweet every now and then. So, that's always on the back of your mind, no doubt about that. But for the raw data that we do have coming in next week, I certainly agree with Riz that Netflix is kind of the epicenter of the earnings conversation next week, as Taiwan Semiconductor was this week. Netflix and Taiwan are the two stocks that are the growth stocks that really kind of can create some degree of catalyst. And the one thing I will say about Netflix is I'm actually very, very interested in how Netflix performs on earnings. I'm not going to touch it in front of earnings, but you've been downward drift for 6 months here on Netflix, and this is after they did the big time 10-to-1 split just recently, and we haven't caught a bid since then. And so obviously selling off here, bear downtrend on Netflix. Can it find some degree of bottom here on their earnings? Can the earnings be a catalyst for a reversal candidate here? And I'm very interested, not just to day trade that day on the NQ, but I'm very interested in long term on Netflix to see kind of how this one plays out. There's a lot of earnings next week that do interest me, but Netflix would be the one. On the economic side, I'll go with the BOJ next week, the Bank of Japan reporting monetary policy. We don't have the same concern about the Bank of Japan right now that we did 6 weeks ago when they last reported, and there was a big time conversation on the unwinding of the Japanese carry trade because they were raising interest rates. That's not expected here. And so we're not expecting some degree of massive unwinding of the carry trade. But whenever the Bank of Japan reports, and they are the number one carry trade out there, which team, that means it's the number one trade in the world. When you're the number one carry trade, you're the
Yeah.
number one trade in the world. You have more money in that trade worldwide than you have in any other trade out there. And so when that trade gets unwound, you have massive volatility across the global marketplaces. That was a concern going into December, less of a concern coming into January, but it's still in the back of my mind. And it's kind of a light week economically next week. So I'll go with the Bank of Japan.
Nice. Can you pull up the Netflix chart again?
The Netflix what?
The
Chart?
Netflix chart.
Yeah, of
I'm
course.
just looking at it, and if we could run to that support level, that could be
82.
yeah,
Lock it
that could
in
be
right now.
a
82.
nice place to catch a bid.
It's a
And
foundational support level at
yeah, that's
82.
just screaming at
You
me.
you want to know what I love about the 82, Justin? Because it caught my eye the same way it caught your eye. Is it's 82 or nothing. Like you either like it at
Literally, wow.
82 or
Hmm.
you like it at 67 or you like it down around 60, but you don't like it at 80. You don't like it
Yeah,
at
there's
78.
some big gaps. That's
Well,
crazy.
it's what I
Mm-hmm.
love about the Netflix situation because it's an easy conversation. Give me a reversal around 82 to 90 and let's get it up and go. Underneath
Yep.
that, gloves off. So I agree that caught my eye as well.
If Riz and Matt, if you had to say that Netflix would beat or meet expectations or miss, which would you pick? Let's start with you, Riz.
I think they're going to beat expectations. I
Okay.
think the guidance, I
80%
think
of
they're going to
S&P
beat.
500 companies beat expectations, so I'll definitely say they beat
Yeah.
expectations. The interesting question, once again, Justin, is not if they beat, but do they beat by that 7%? Are they
You
beating
blew
Right.
my mind with the
above
7%.
the market expectation?
Mhm.
Remember, it's not earning. The earnings game isn't played at zero. It's not whether or not you make money or you lose money. It's played at the expectation ball game. You
Mhm.
have expectations that are set in stone as you come into earnings season, and then it's all based on that expectation. The average beat on against EPS is right now at 80% with I would say right around 7%. As we get a week from now, Justin and everybody, that 7% will modify based on the average beat we're seeing in
Mhm.
the market this quarter. The 7% is based on last quarter. And so, yeah, I certainly think they beat But to me, it's more about there's a low bar expectation here on Netflix because Netflix hasn't done anything. Netflix is down 30% in the quarter. Netflix is getting smoked. Netflix hasn't been a part of anybody's conversation for months and months and months now. That interests me because it doesn't take a lot to get this puppy to giddy up and go.
Well, it's an interesting time too because that whole Warner Brothers news just came out. So earnings mixed with that could be a nice catalyst.
Though I
Now,
guarantee Netflix will talk about that too because they're looking
oh,
to increase their
100%.
bid.
Yeah. So now, since there is a holiday on Monday, kind of a rapid fire question to start with you, Becky. Are you trading Monday? Why or why not?
No, I am not. I actually scheduled some other work for that day because my family is all going to be home, and so I'm just going to actually take a little sleep in and then have a real productive day in other parts of my life because the
Love
volatility
that.
is not there. Sometimes it's just painful for smaller points, and so it's not as appealing.
Yep. Riz, are you trading? Why or why not?
Absolutely. I'll be working Monday morning at the open. So you can catch me in the morning stream. So yeah, I will be trading the morning session. I won't be trading the afternoon, but definitely in the morning session, you can catch me there.
Hey, I'm just like you. I can't stay away. It has to happen. And Coach Matt, what about
Right?
you?
There's 250 trading days in the year. I don't need to be at 250. I'm taking the day off with Becky.
All right, so it's just Riz and I will be the only degenerates trading on Monday, apparently.
There you
And
go. There you go.
Coach Riz, you brought up a great point. Mike is the president of Blue Sky, one of the best traders I've ever seen. He'll be back trading on Tuesday. And if you're newer to Blue Sky, I'm telling you, this guy, we have a joke with the Blue Sky team. We call him the auctioneer. Once he starts calling levels out, it's you better just follow him because if this breaks this, we hit this. If this and it's insane to watch. So please be sure to tune in on Tuesday and pack the house. And let's move on to our next segment. All right, welcome back. Now is, as always, my favorite section of the show. We have Blue Sky traders, or even traders who aren't from Blue Sky, messaging in their questions for our coaches. And this is great because I know when I was a new trader, I had so many questions, but I had nobody to ask. Well, you have us to ask, and you have these coaches that trade for a living and are experts on the subject. So today, all of the people wanted to stay anonymous. They don't want their names. So no shout outs today on the questions. But today, first question is for you, Becky. And this is great because this is a psychology question. And you and I have actually talked about this before. But what was the moment you realized trading wasn't a strategy problem, but more of a mindset problem?
Oh, yeah, I love that question. So I first learned the stock market. I knew nothing. And so it took me, a solid year to understand all the ins and outs of how to execute a trade and what trade opportunities were. And then I still was missing something technically. I got to an advanced mentor and really started learning strategy. And then I figured out how to pull a really good trade. In that community, a lot of us started making really good trades. But then there would come a time where I would still fall on my face. I would still tilt. I would still encounter experiences, opportunities on the charts where the setups were there and my fellow traders who knew what I knew were capitalized on them and I would sabotage myself. I would over leverage, I would mismanage, I would revenge trade or overtrade. And that's when the hard conversation happened with my mentor of like, listen, it's not necessarily the setup because we could talk about the setup. It was there. You saw it too. What happened? And so that's when I really had to, I guess, realize that I needed to do some work in another area because I had really pushed the technicals early in my trading career. And this was the time when it was smack in my face of you really want this, you really want the outcomes of these great trade opportunities, then dig deeper into your own personal world. And so that's, I guess, what the biggest catalyst was that I knew that I could see the trades and I wasn't getting the outcome. And so that hard conversation had me really going inward. And I think that every trader will experience that. Once you get enough technical understanding underneath of you and coaching and education in that department, you will the issue will become psychological, and that's when every trader I think has to go through that period.
That's a great answer. Now, every trader is different, but for you personally, how far or how long into your trading journey did you realize that, hey, I know how to read a chart, but this is what I need to start working on?
I think realizing it was over many, many months, but finally accepting that I had to actually do the work, that was around the 2 year point because I was with the first company for about a year and I didn't learn what I needed to learn. And then I was with this other educator for 9 months. And then I started taking really good trades when I really got a system under my belt that I could understand. And then that's when the errors were hurting me more because I was so frustrated. And he's like, listen, use this frustration to dig into the next phase of your growth, which was the psychology part. But for me, it was 2 years where I actually had this really strong technical edge. And then the frustration was overpowering in my psychological struggles.
Yeah, I mean, I feel like your and I journeys were so similar because I knew how to read a chart. I could hit those trades, but I just take myself back to the beginning every over and over and over. And I think after 2 years, I finally said, I got to do this right. And that's
Yeah.
what I love about Blue Sky is we have you as a psychology coach, trading coach. We have, Riz, Matt, and a couple other new coaches. Our aim is to get that journey, less and less time, give you the right guidance. So, I love that. Now, next question is for Coach Matt. This one is going to be about charting and technical analysis. So, what is one thing on a chart that beginners misunderstand the most? This is a very open-ended question. It could be
The
literally anything.
most? I was going to say everything. I think there's a lot of over analyzing on a chart and thus misinterpretation for a lot of new traders. There's no doubt
Mhm.
about that. Because new traders, they'll understand trends, they'll understand patterns, they'll understand support and resistance, and then they'll look at the chart and they'll be like, but I see 14 billion different things. And so I think there's a couple things that, and I could literally stay on this topic for days, but there's a couple things that I'll narrow it down to. Number one is looking at the right time frame. That's probably number one. If you're having a hard time finding the trend, pattern, support, resistance, you're looking at too much time frame. If you're on a daily chart and you're processing a swing trade and you have 2 years of data on your chart, you got too much data. You got to look at the immediate short-term trend to really kind of process that. And so I think one of the things is just selecting the right time frame to even process the information. But if there's going to be one thing you add to a chart, because I think that was the epicenter of your question,
I think that's what they were
I
getting at,
think it's
more of
moving
like maybe an
averages.
indicator or something like
Yeah,
that.
I think it's moving averages.
Hmm.
Moving averages have multi-purpose to them. And there's a general philosophy of, ooh, these magic lines are all I need. You have to have a little bit of a deeper understanding of that. And so I think there's an assumption of how moving averages are used. And then as you start to learn from people who have been there, done that, they're like, oh, that's not how you use moving averages. And so, yeah, I do think moving averages are probably misused the most, I would say.
Mhm.
Third would be indicators and front running
Hmm.
indicators, but I would say moving averages on a chart create a lot of confusion initially.
Yeah, I mean, I think every new trader I talk to, the first indicator they put on is VWAP and moving averages.
Yeah.
And maybe RSI and stuff, but that's not on the actual chart. Now, you did talk about different time frames, and since the majority of us at Blue Sky are day traders, for intraday, if you had, this is going
I'm
to be a tough
slowly
one.
trying to
If you
change that.
had to
I'm
pick
slowly
one
trying to
time,
increase that swing trader mentality,
if you
but
had to pick one time frame for intraday trading, what would it be for your levels?
1 hour time frame, not even close for me. It's an epicenter of so many time frames for me. It's the longer duration time frame for me from a trending perspective on the intraday side of the equation. It's also the shorter duration time frame for me on swing trade. So it's the 1 hour time frame.
I wish I could disagree with you, but I do the same exact thing. Great
Yep.
answer. Great answer. All right, last but not least, Coach Riz. This is a great question for you because you spend the majority of the day streaming. You get a lot of questions from our members and you see the ups and the downs. So this one is great. What rule do traders break the most right before they blow an account?
I think they get a little overconfident. I think overconfidence and is the Achilles heel to a lot of traders. Is that their confidence and wanting to be right gets ahead of really seeing what the chart has to show them. I say that in the Discord every day. Being a trader is not about being right; it's about making money. And the only thing that matters in trading is that your portfolio is growing and then it's green. Doesn't matter about what you're posting or screen capturing the 1,200% gainers. That doesn't matter. It doesn't matter. All that matters is that you're green. Being able to read between the lines and see that, okay, not getting tilted and realizing how much time you have in the day. Is there a possibility that you can find another opportunity to not only make up that loss, but get green in the day? That takes patience, that takes insight, and you have to also have confidence in yourself, but not all overconfidence that you're like, I'm going to just throw all my rules out the window. That is what has helped me in this point in my trading career, is that, when I get into the rut and get into drawdown, to take a step back and see, okay, what needs to happen in order for me to, one, get out of the hole and then get to a positive, because that allows me to then start to visualize and attack what trade am I looking for, because there's a specific trade I'm looking for that will do X, Y, and Z.
I love that you said trading's not about being right. It's about making money, because I think people focus, especially with social media and everything, they focus on, I was right. But I think admitting you were wrong is more important than that. And like you said, trading is to make money. If you're not making money, who cares if you're right? So I love that.
Yeah.
Why don't you learn how to make money when you're wrong?
Yeah, true. So that ends our Ask a Coach's question. Now, since we are going into the new year, I figured what better way to end the episode than some rapid fire predictions about what's going to happen, some rapid fire questions. So coaches, I don't want any long-winded answers. I want one word answer and maybe one sentence follow-up. I'm going to go Becky, Riz, Matt for each question. So will 2026 favor trend traders or range traders more?
Range traders, because I think we've been trending for quite some time now, and it's already getting a little choppy.
All right, Riz?
Beginning of the year, chop. I say range trading.
Okay. Matt?
I got the market up 13% this year. I think we're going to get 3 consistent trends, but I do think for the most part we're going to be range bound. A lot of neutrality this year.
That leads into my next one. Will volatility expand or contract in 2026?
I think it goes in line with what I'm thinking of the contraction. I think it's going to get wonky and we'll make some peaks and valleys, but it won't be too fancy, I don't think.
I think we're going to see some exaggerated moves. There is some very volatile news coming in the market. So I feel like we're going to probably see some of that volatility in the intraday, hopefully. Some extended moves. Hopefully we'll take out some of those all-time highs here and, in the next coming week or so. But I expect us to see some very wicky price action.
If the comparison is against 25, I would expect less volatility in totality, because I know it feels like 5 years ago, but Liberation Day was in 25 and we dealt with a big time volatility. And so you had a massive 30% downward movement in price in 25. You had a massive 40% upward movement in price in 25. Like, these are really, really wide ranges, big time trends. And so if I'm comparing it against the fourth quarter of 25, I would say more. If I'm comparing it against the entire of 25, I would say less.
I agree, because the first Q1 and Q2 were just nuts.
They were outlandish.
Yeah. Now this is a good one. ES or NQ in 2026, which will be better to trade?
Yes.
I knew you would say that. I knew Matt would say that.
I had to get front Riz.
Yeah.
I had to get front Riz on it.
NQ all the way. NQ all the way. Give it to me fast and let's make mad money.
See, I'm with Riz on that. We want that volatility. We want that 200-point days, 300-point swings. Let's do that.
Yo, come to my lab on consistency, man.
All right, now the last few questions are about kind of expectations for newer traders that this might be their like 6 months in their journey. Maybe this is their first new year of trading. Will 2026 be easier or harder to trade than 2025? Becky, let's start with you.
Harder.
Any specific reason or just gut feeling?
I think that we're going to get more intraday volatility and less consistent trends. And I think that is challenging. I think that the political climate is heating up and I have some concerns in that department. And that can often tend to some fake outs, drama, volatility that is less easy to anticipate. And so if you already are learning a little bit about anticipating moves, I think that there's going to be some curveballs thrown this year.
I totally agree. What about you, Riz?
I think it's going to be easier for traders because we've already had this presidency and this administration for 2 terms now. So I think they're situated that they understand what the market needs, and that's not these inconsistent, crazy news dropped in the market. There's enough of them there now participating in the market. They realize that standing on the soapbox and saying, well, we're tariff this or the market that, is disastrous for the market and investors and their own portfolios, more importantly. So I think they've learned the lessons of that. And we're seeing a lot more reservation on what's being said. And now when you're seeing like things that can really just throw a turn in the market, it's happening on Friday. It's happening on the weekend. It's happening when nobody can attack the market and no volatility can adversely throw the market in one way or another. So I think some lessons have been learned, and I think we'll see that continue to be the case.
All right. And last but not least, Matt, easier or harder for new traders this year compared to last?
I hate to disagree with Riz, but I don't think those lessons have been learned, personally. I see more chaos, not less. I see more random timing of news drops, not less. I see a presidential administration that's willing to drop a major financial story 5 minutes before the Sunday futures open.
Oh my God.
That's an administration that does not care 2 cents about the market. When
Yep.
you're dropping major news 5 minutes before a futures open. Just a few months ago, as the market was going down, the president said, "I don't care about the stock market." Market goes up. Well, I care about the stock market. I'm not sure those lessons have been learned. I agree with Becky on that. I think the first year of the administration was the easy part. You're now going into a midterm election cycles. You think it's volatile right now? Just wait till October, guys. It's going to
They're gonna
get
start fighting.
really nasty from a political perspective this year. I anticipate things we have not seen in this country for 100 years, and so I do question how the market's going to participate in all of that, because sometimes you got to separate church and state, politics and finance, but recently they've kind of been merged together quite a bit. And
Mhm.
so I do think I do think it's going to be a little bit more difficult because I think the political environment's going to be a little bit more difficult. I think the geopolitical environment's going to be a little bit more difficult. And without that, I think we're up 20% this year. I think the AI trade and the growth narratives are absolutely fantastic. And the last point I'll make on this is we had a lot of volatility in 25, but we also had a lot of consistent trends in 25. Yeah, Liberation Day sucked, but the recovery was amazing trends and it was very consistent and it was not difficult to process. The last 3 months has been a little bit more difficult than the previous 3 months. And so I think that's going to continue until we get a little bit less volatility on some of the things that aren't pertaining to the stock market. So I agree with Becky. A little bit of a disagreement with Riz there, but we'll have to wait and see how that plays out this year. I just have concern with the midterm elections this year.
I always love predictions because it's up in the air. Everybody has their own
Well, that's
opinion.
the thing. Who knows what the path is 10
Yeah.
months from now? You know what I mean?
And
Like,
I'm going to be the one to say it. My answer would be, I don't know. Let's just see what
yeah.
happens. It is what it is. All right. And
Hey,
let's
I
do
didn't know that was a choice.
Babe, you got free will. You can say whatever you want.
We'll remember that the next time you ask us to do a prediction.
Yeah. And last question before we get out of here. This is, I think, is important for a lot of people to hear, and I want to hear your answers. The question is, what will cause most new traders to fail this year?
Over
Over
position
leveraging.
sizing.
Too easy, right?
Mm.
Well, Riz, since they said it at the same time, what are you thinking?
I think the same thing. I think it's over leveraging is Achilles heel to all traders.
Mhm.
I love it. My answer is always over leveraging, over trading. It's what everybody goes through. We've all talked about it. We've all done it. But wow, what a great episode. A lot of things covered. I'm really excited next week because first of all, Coach Mike, the president of Blue Sky, will be trading with us. And secondly, next week we are interviewing one of your Blue Sky trading members. We're going to hear their journey,
Ooh.
their ups, their
Nice.
downs, their struggles, and we're going to learn that everybody's journey is the same. So once again, thank you for coming by. If you learned something, if you found this entertaining, please go on YouTube, whatever platform you're on, leave us a comment, leave us a share with your friends. Other than that, until next time, stay profitable.